Hello, good morning everyone. Today we are going to discuss one chapter which is incomplete record. So, under incomplete record, you need to know how to prepare a statement of affairs. Okay, so first thing is statement of affairs. Basically, statement of affair is nothing but it is your financial position, kind of financial position, but statement of affair is not prepared at the end of the accounting period, whereas your statement of financial position is prepared at the end of financial period or at the end of accounting period. Okay, so statement of affair, how are you going to prepare this? First of all, you need to write down your all assets. Okay, then write down your all liability, and when you're going to deduct from your liabilities from your assets, okay, that is your capital. So from statement of affair you are able to find out your capital. Okay, if they ask you to find out opening capital, so by using what, by using the opening balances of your assets and liability, you're able to find out your opening capital, and by using closing balances of your assets and liability, you're able to find out your closing capital. For example, let's say, the total assets for 2010 is 50,000. Okay, whereas in 2011 it's 10,000. Okay, for example, if total liability is 80,000, 8,000, or you can say just 10,000 for make the calculation easy, 10,000. Okay, and the closing balance is, for example, 5,000. So by using these information, how you going to find out your opening capital? So you have to make statement of affairs as on 31st, whatever the date, 31st March 2010. So first of all, write down your assets, for because you are going to find out opening capital. Okay, opening capital, so use this balance, opening balance of assets, that is 50,000, and then liability, that is 10,000. So your opening capital will be 40,000. Okay, and if you need to, so this is your opening capital. If you need to find out your closing capital, how you going to do that? Again the same, again you have to do this thing, but for finding out closing capital, you have to use your closing balances of your assets and liability. So that is your 10,000 and 5,000. So 10,000 minus 5,000, 5,000 is your closing capital. Okay, so although you'll find out non-current assets, current assets, then non-current liability, current liability. Okay, this is just an example. Okay, now let's move towards the next portion, that is profit. So how you going to find out your profit? So I think this much is clear to you all, like opening capital, okay, plus additional capital minus drawing and plus net profit, okay, is your closing capital. So if you need to find out your net profit or profit, what you going to do? Because basic formula is opening capital plus additional capital minus drawing, okay, plus profit is equals to closing capital. So if you need to find out this profit, so then closing capital minus opening capital minus additional capital plus drawing is your profit, is your what, is your profit. Okay, if they insist you to prepare to find out profit, by capital account. So how are you going to do that? You know how to prepare capital account? I think so. You know this thing. If you don't know, it's okay. Date, detail, dollar, date, detail, dollar, or amount. So balance brought down, and this way balance carried down. So balance brought down means opening capital. Balance carried down means closing capital. Okay. Then if there is any additional capital, you have to write it here. Okay. If there is any drawing, so drawing will reduce your capital now. So drawing this side. Okay, now what you have to do? You have to just add these two and deduct these two. Means wherever you will find, if the difference arises this side, so it is your net loss. Okay, if the difference in your credit side, it means it is your net profit. Okay, now by using some figure, we are going to use this capital account. For example, capital on 1st April 2010 is 50,000. Okay, and then additional capital introduced in between, that is 10,000, and drawing, it is 5,000. So if you're going to find out profit or loss, so two ways you are having. Okay, one is by using the formula. Okay, so profit is closing capital minus opening capital minus additional capital plus drawing. Okay, so closing capital minus opening capital, okay, minus additional capital and plus drawing, minus additional capital and plus drawing. Okay, so closing capital is, suppose capital on this, and capital on 31st March 2011 is 20,000. Okay, so closing capital is 20,000. Opening capital is 50,000. Okay, then use additional capital is 10,000, and then drawing is plus 5,000. So by solving this, you will able to find out your profit or loss. Okay, or you can use it by this way, by capital account. Write down balance brought down here, balance carried down here, opening balance of capital, closing balance of capital, then whatever the drawing which is used by the proprietor for personal use, you have to write it here. Okay, and then whatever the additional capital, if it is given in the question, it's okay. If it is not, leave that. Okay, then net profit and net loss, you will able to find out either net profit or net loss. Okay, now moving forward to the next thing. Okay, so next is your ratios. Okay, so GP margin is net GP upon net sales into 100. Okay, and GP markup is what? GP upon cost of sales into 100. So just remember this thing: margin we are going to use net sales. For markup, we are going to use cost of sales. Okay, so what is cost of sales? So cost of sales is equals to opening inventory plus purchases minus closing inventory. Okay, now one more formula, it is like inventory turnover ratio. So what is inventory turnover ratio? Cost of sales upon average inventory. Okay, and your answer will be in times. Okay, now what is average inventory? Average inventory is opening inventory plus closing inventory divided by 2. Okay, now these are the formulas. Okay, so let's do one question. Okay, suppose in this question they want you to calculate closing stock. So they want you to calculate closing stock. Okay, so by trading account. So how are you going to do that? For that they gave you revenue, that is $150,000, and opening stock is also given to you, that opening inventory and opening stock is same, that is 24,000, and purchases is also given to you, that is 110,000 for example. Okay, and GP margin is 30% or 20%, any digit you can take. Okay, so before doing this you need to know how to prepare trading account. Okay, so format for trading account is net sales or net revenue minus cost of sales, that is opening inventory plus purchases minus closing inventory. Okay, and then GP is your answer. So whatever information we are having, we just use that information first. So revenue is given to us, that is 150,000. Okay, cost of sales directly it is not given, but yes, opening stock is given, that is 24,000. So opening inventory 24,000, purchases is also given, that is 110,000. Okay, and closing stock is not given, let it be X or something, question mark, put it at question mark. Without purchase you cannot find out your cost of sales, right? And also not your GP, you are not able to find out your GP. So but GP margin is given. So how are you going to do? Use this formula, GP margins formula. So GP margin is equals to GP upon net sales into 100. Okay, so GP margin is 30, put it 30 here. GP we don't know, but revenue we know, 150,000 into 100. So $30 times 150 is your GP. So GP is 45,000. So my GP is 45,000. Okay, now what you need to know, calculate because in question they want you to find out the closing stock. So the formula for cost of sales, you know that. Okay, So the formula for cost of sales is opening inventory plus purchases minus closing inventory. Okay, so cost of sales you already calculated? No, it is not. You have to. Okay, so how are you going to find out your closing stock? Because 150,000 minus something, that is cost of sale, is 45,000. Okay, so your 105,000 minus 40, 150,000 minus 45,000 is your 105,000. So cost of sales, yes, for cost of sales is 105,000. So 105,000 this side. Okay, opening inventory, it is 24,000, purchases 110,000, so we are going to use this 24,000, 110,000 and less closing inventory. So closing inventory is equals to 24,000 plus 110,000 minus 105,000. By solving this, you easily calculate your closing inventory, that is 29,000. Okay, so this is your answer. This is your answer. Okay, I think this thing you're able to calculate. So for you all, for practice, just solve this thing. Now you need to calculate opening inventory. Okay, so how you going to find out opening inventory? By using trading account. So for this, the information is revenue, that is 180,000, and then closing inventory, that is, for example, 40,000. Okay, then purchases, that is 200,000. Okay, and take GP margin, that is 40%. So find out opening inventory. Okay, let's move towards the next question. So they can ask you any figure. Okay, so for example, they want you to calculate revenue. Okay, so by using the trading account, how you going to find out revenue? For that they gave you information. Yes, opening inventory is there, that is 50,000 for example. Okay, and closing inventory is also there, say 60,000. Okay, and then a rate of inventory turnover, that is 10 times for example. Okay, and GP margin, that is 20%. Now you have to find out the revenue. How are you going to find out revenue? By trading account, because you know how to prepare trading account. Okay, so for preparation of trading account, net sales, or you can write down revenue. Okay, we need to find out, then less cost of sales, that is opening inventory, plus purchases and minus closing inventory. Okay, whatever you are having, that is your cost of sales, and after that you will able to find out your gross profit by deducting net revenue, net sales minus cost of sales as your GP. Okay, now use this information. Opening stock 50,000. Okay, so 50,000. Okay, closing stock is 60,000. 60,000. Okay, purchases you don't know, So when you don't know purchases, you don't know, you not able to find out your cost of sales. If you don't have cost of sales, net sales, nothing you'll able to find out. But luckily we are having this thing, these two things. So rate of inventory turnover, we are going to use that first. Okay, so how are you going to use that? For that you need to know the formula for rate of inventory turnover. So rate of inventory turnover is what? Is your cost of sales upon average inventory. Okay, so rate of inventory turnover is 10 times. Okay, so 10. Cost of sales we don't know. Okay, but average inventory we know, because average inventory is what? Opening inventory plus closing inventory divided by 2. Okay, so 50,000 plus 60,000 divided by 2, sorry, divided by 2, that is 55,000. Okay, so average inventory is 55,000. Okay, so use this here, 55,000. So 10 times into 55,000 is your cost of sales. So 550,000 is your cost of sales. Okay, so we can use it over here. Okay, 550,000. Okay. Okay, so by this you can able to find out your purchase also, right? Okay, so 500, and how are you going to use that? Because you know the formula, that is cost of sales is equals to opening inventory plus purchases minus closing inventory. Okay, so cost of sale is 550,000. So 550,000. Opening stock is your 50,000 and closing is 60. So 50,000 plus purchases minus 60,000. 50, 60, yes. So 550,000 minus 50,000 plus 60,000 is your purchase. So 500,000 and plus 560,000. So purchase is 560,000. Okay, so write down 560,000 here. Okay, so now by using GP margin, okay, now moving forward, so you know this thing, right? Ki what is the formula for GP margin? So GP margin is GP upon sales, or you can say net sales, into 100. Okay, GP margin is given to you in question, right, which is 20%. So we are going to use that 20 this side. Okay, now you don't know GP, right? Let sales be X. Let sales be X. Okay, so if we putting X here, so my GP is X minus 550,000, right? Because if we're going to if you need to find out gross profit, net sales minus cost of sales, so X minus 550,000 is my GP. Okay, so I'm going to use this X minus 550,000. Okay, upon net sales is X, because here we take net sales as X. Okay, and then into 100. Just find it out quickly. How are you going to do that? 20 X is equals to X minus 550,000 and this over here. Okay, so 550,000 this side, 550,000, then X is here, then minus because this is plus. So if you're going to change the side, 20x upon 100, you take 1, then 550,000 to 100x minus 20x divided by 100, 550,000 into 100 and divided by 80 is equals to X. Okay, so where is my calculator? Okay, we can do like that. Sorry, 550,000 times 100 and divided by 80. So 687 500 is your X. X means net sales. Net sales oblique revenue is 687,500. So this is how you're going to solve the questions. Okay, for practice I'm going to give one question. So calculate revenue by using trading account from the following information. Okay, so opening inventory $50,000, closing inventory $80,000, rate of inventory turnover, that is 8 times. Okay, and GP margin, that is 20%. So find out your revenue, although I'm going to give you the answer, that is 650,000. Okay, but for this answer just follow the steps. Okay, so that's it for today. Have a nice day.